Make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important, and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was, and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors.
Well, good morning, good morning. How is everybody doing today? I hope you're doing fantastic. It's great to have you here as we get into another live stream. Hope you've had a wonderful start to your week. It is right smack in the middle. It's the noon hour Central Time on Wednesday, so you're exactly at the halfway point. We're at the tipping point for the week. Welcome to those of you on the East Coast. Happy afternoon. Those of you on the West Coast, good morning. And let's get the party started. Let's do it. Today, we're going to do a quick little market overview like we do usually do, and then I'm going to talk about a topic around candlesticks. Candlesticks are one of the 5 disciplines of trading, and I'm not going to, one of the 5 disciplines of trade analysis, I should say. I'm not going to go into super depth. What I am going to do, can't get my words out, but what I am going to do is I'm going to teach you in about 15 to 20 minutes the absolute keys of candlesticks. And I'm not talking about, hey, here's an open, high, low, close. What I'm going to teach you is I'm going to teach you how to quickly interpret and apply the candlesticks. It's some of the most rapid candlestick download I could possibly give you. And if you'll apply it, it will absolutely change the way you approach the market in a positive way. So that's what we're going to talk about today. But before we do it, let's do our regular market update, market overview, and we will start there and go from there. So you should be seeing my screen here. You should be seeing the Dow Jones Industrial Average. And if you can see the little numbers over here, you might be able to tell that we are up about 600 points on the day at the moment. Now, at one point, we were up over 1,000 points. And all you have to do is look over here at the chart and let's turn off our moving averages here. You can see, hopefully you can see, there is a fairly small candlestick body with a long upper shadow. What a perfect setup for today's teaching. This little candle body with a long upper shadow is reflective of the fact that we were up over 1,000 points at one point this morning, but it has sold off. That's where that upper shadow came from, is we had all that selling pressure that came in has pushed the price back down. So yes, we're up, but if we're looking at the momentum of this trend, what's happening? As we hit our pivot point, as we hit our resistance, as we run into the moving averages, the selling pressure is coming back, and we're starting to see a little bit of that push the price down and oppress it a little bit. So where do we think things are going? Well, I'm more convinced than ever at this point that we're going to stay kind of in this trading range, kind of stuck. We've been talking about it for a couple weeks. After the big sell-off over here, we bounced, and I kind of warned you, I was like, we might continue, we might get stuck here, we may just, rebound. But what we've been talking about for the last couple of days is highest probability is just kind of getting stuck in here. And I think that's exactly what's going to happen right now. That is what it's shaping up to be. You can see the turn that came in here. We had the turn here. Now we're getting another turn. So I think at this point, it's looking like it's going to be something like this. It could be tighter. It could be wider. There's a lot of variations of what can happen. But the thing I'm pretty convinced of right now is that we're going to stay relatively sideways, at least for the next week or two, as kind of the price action consolidates and traders try to figure out what's going on. Take a look over here at the S&P 500. It's a very similar picture. It's a green candle, but it's basically the same thing. It's a small spinning top doji type of a candle with a long upper shadow, because earlier today we were up substantially, but the bears came back in and started to drive the price down. Same thing on the S&P, same thing on the NASDAQ. I don't have to regurgitate the exact same information, because basically all 3 of these right now are pretty much in sync. They're all doing essentially the same thing. The market is basically trying to recover from the rapid selling that we had back in the beginning of March, into February, beginning of March, and kind of accelerated here into the beginning of April. And it's just consolidating a little bit. So it's not a shock at all. It's very natural for the way that market cycles work. And that's what we see playing out at this moment. Now, let's go down and look at a couple of other stories that are developing. Bitcoin was a story that was developing yesterday. It continued nicely, but notice what's happening today. Small little spinning top candlestick right on our pivot area. I said it yesterday. I said I thought that we were ready to start moving, but maybe not trending yet. And based on where our stochastics is, based on where we are, don't be surprised at all to see your Bitcoin make a turn. Actually, it could sell all the way back down into the mid 70s, possibly, as it builds more stability and more momentum. The other way you can see this shape out, and probably more likely, honestly, is that it would sell off kind of to this neckline, which would be about 87,000, make the turn. And if that happened and coincided with a turn in your stochastics, that would be a fantastic buy signal. So we'll wait and see if and when that one shapes up. The other big story in crypto is Solana. Getting very excited about this. I've been talking about it now for a couple weeks. We did technically break out of that neckline, and it is technically meeting the criteria of a bullish trade, technically speaking. I'm concerned that we are very overbought. Now that can happen. We can get overbought and stay there, but I'm concerned we're very overbought as we run into this resistance. I sure would love to see this thing just sell off to about 135 and then make the turn and give us a much more confirmed entry. I would love to see that, but this may be all we get, and I wouldn't be surprised if this is all we get at all. Let's just kind of watch it and see where we go from here. But those two are definitely moving in the right direction. Then take a look over here. Oh, XRP, pretty good move. Starting to shape up here on XRP. We're about to break out of that pivot area. So if you've been kind of sitting on that saying, okay, when are we going to make our next move? Get ready. I would say an entry maybe around 235. Getting very, very close on that. I want to touch on gold. I've been talking about this for a couple days. I've been warning people. I've been saying, hey, we need to take some profits off. Made a big deal about it yesterday, this bearish engulfing formation. I listened to a podcast earlier this morning from somebody that I often check in with. And he and I disagree a little bit on the forecast for gold. He always thinks that gold should be like 50,000 an ounce, and I don't. But his story was, somebody asked him in the chat, said, why did gold sell off today? And his response was, because the market's up. That's BS. That's not the truth. I love the guy. I'm not going to mention his name. I love him. He's really great at a lot of stuff, at what he does well. He does great. The reason gold sold off is because we were as extended as we needed to be. We were at a pivot area. We were at the target. And we were warned yesterday. We knew that this thing was ready to go. We're overbought. Your stochastics are crossing down. Have we sold off enough? I don't think we have. I think we need to probably at least see it come back down into the 20-period moving average, possibly all the way to the 50-period moving average. Don't be surprised if you see gold doing this, possibly for a month or two. Like, that's how far we've gone. It could be a little bit before we actually see another real buy signal on gold. Now, I'm not saying it's going to happen that long. I'm just saying don't be surprised at all. And we were prepared. We knew that this thing had hit its target. I told everybody yesterday, I've been telling people in our profit picks on Sunday nights, take your profit, tighten your stops, get ready, because this thing's about to turn on you. And then, of course, people who always make the fundamental argument, why are they so confused? Oh, well, it's because the market was up today. No, it was just time. It was going to happen no matter what. Silver is trying desperately to make its move. A lot of people that are saying silver, is trailing gold. It's going to get caught up there and it's going to blow out, bust out. That could happen. It very much could happen. But I've got my eyes on about 3150 as the major resistance. Let's see what happens when we get here. If we get to 3150 and we can actually break out of the pattern, then maybe we've got a trend. But right now, we're still stuck. I'll zoom out a little bit here. You can see it. We're still stuck in this consolidation that we've been in for months. It's kind of an ugly one, but it's definitely a consolidation. So no trend right now on silver. And I'm sorry if you're a silver bug or a gold bug. Look, I love it too. I get it. But you have to read it like it is. You got to interpret the data like it is. And when you start interpreting the data like it is, you're going to be a lot more successful and a lot happier with your results. So that's my big picture market overview. If you got any questions on that, type it into the chat. Type it into the chat. Those of you over here on YouTube, type it in. If you're over on Rumble, you got some questions, comments, type it in there, and I'll do my best to address them. With no further ado, if we don't have any questions related to the big picture market, then let's jump on over and start talking about candlesticks. Now, candlesticks, as I said in the opening, are one of the 5 disciplines of trade analysis. When I first started trading back in 1999, candlesticks in the United States were relatively new. Most people didn't know a whole lot about them. For the most part, when people would look at a chart, a stock chart, they either used a bar chart or a line chart. Candlesticks were pretty much brand new because Steve Nissen, who brought them to America from Japan, he wrote his book, I want to say 93, 94. So we were like in that first 4 or 5 years that candlesticks had been introduced, and people really didn't know what to make of them. Over the years, they've obviously infiltrated, and today I would say it's because of Steve Nissen's work that the Japanese art of candlestick trading has not only taken over in the United States, but it's actually gone back to Japan. It was almost a lost art in Japan as well. So it's kind of interesting to watch the stories here. Japanese candlesticks, if you're not familiar with them, are one of the oldest forms of technical analysis in the world. They predate pretty much all of the tools that we've got for the most part. It's one of the oldest forms of charting. And we've got a solid history, at least into the early 1700s, but we could go back as far as about 1650 and show a track record to at least where the roots of candlesticks were being born as a charting tool. And so technically speaking, that was really one of the first forms of technical analysis as we know it today. Of course, all the early forms has kind of been washed away in favor of the more relative stuff. But let me just give you a quick high-level overview. And I'm going to do a lot of drawing on the screen today. I don't have as many slides for this. I had them, and I just thought, I think I'm going to do it free willy here. I just have some bullet points to work with rather than just teach from a slide. So in case you don't know how candlesticks works, I'm going to give you like a 1-minute overview here. You have two types of candlesticks. You have an open candle and a closed candle or a solid candle. These are your two types of candlesticks. And the solid candle is literally what I'm doing right now. It's just a candlestick that you have colored in. Okay? That's all it is. In the case of what we call an open candle, it looks black because my screen's black, but in reality, it's a hollow or an open candle. So if you were on a white background, it would look like a white candle. And you're going to have the real candle body. That's the big part of the candle. The bottom, that's going to be your opening price. The top of it's going to be your closing price. And then the extreme high is going to be your intraday high for the day. And the low is going to be the intraday low for the day. On the solid candle, it's the same principle. The high and the low stay the same. But instead of reading from the bottom up, we're going to read actually from the top of the candle body down to the closing price. Okay, and so this is how you know if a candle has a higher open versus a lower, I should say it differently, higher close versus a lower close. Is the candle body colored in? So right now you're looking at that and you're like, well, he's drawing black and yellow candles. Actually, no, I'm not. This is the way that candles are drawn. This whole universe of green and red, what that basically is for lack of a better word, it's a bastardization of candlesticks. It should look like this for a higher candle. That's a higher close than open. But what happens is most of your charting softwares will color it green, and that's actually wrong because that's a solid candle. And then what they'll do for your bearish candles or your down days is they'll color it red like this. And now the problem is you got two solid candles. And you might think that's not a big deal, but actually for those of us who learned candlestick trading the original way, this is really confusing. Really, really confusing because I look at that and I don't associate color to the candles. When I look at candlestick patterns, I associate is it a hollow candle or a solid candle. So when I'm trying to read just solid green and solid red candles, it absolutely messes me up like nothing else. So that's why when you look at my charts, and I'll draw this a little bigger here so you can see it, the way that I've created mine, which is kind of a hybrid, something that I can deal with, and the green and red Christmas tree lovers can deal with it too, is I have basically made my green candles really, really transparent. You can do that in TradingView. Just right-click, go to your settings, and you can change your candle body. In a perfect world, I'd probably leave it completely hollow, but I've got just a little bit of green in there. Just to kind of give it a little bit of shade. But this way, I don't mix them up. This way, I'm actually, when I read my green candles, I read it as a hollow candle, and my red candle is a solid candle. And that's the way it should be. That's the technical way that somebody should be reading and interpreting candles. So there's kind of a big picture, high-level overview. If you've never understood candles, that's how they are constructed, okay? Now, when we look at candlesticks and we think about how we interpret them, the predominant philosophy of reading candlesticks is to learn your candlestick patterns. And there's a handful of them. I have about a 4-hour training, 3.5 to 4 hour training on all the different candlesticks. And if I'd thought about it, I would have brought my candlestick cheat sheet and added that here. Maybe if I remember, I'll go back and put it in the comments so you guys can go back and download it later. But I have a PDF that's it's a downloadable flashcard for your candlestick patterns. And you can download that and you can print it off and you can really drill your patterns. It's a really, really great tool for that. If you want that, put a comment here in the comments, and what I'll do is I'll go back and link that up in the comments, the regular comments, whenever the whole thing's done. Where was I heading with that? What I was going to say is most people focus on learning the pattern. Most people focus on learning the patterns. For example, in a bullish trend, let's say that you are swinging in a bullish trend here and you have a bullish candle that looks something like this. And you have a bearish candle that comes against it like this, and it goes halfway into it. There's a technical name for that, and that technical name is dark cloud cover. Now, this actually comes from translation of Japanese names. And as I said, it comes from really, really old, rice traders in Japan. So they used very picturesque names. But the technical name for this pattern is a dark cloud cover. The challenge that traders have is they don't remember the names. And so you end up sitting here, especially Western society, we end up sitting here drilling the names over and over again, trying to memorize them the way that you learned flashcards and memorization in high school for Spanish or French or something. It's like, what does this mean? No hablo inglés. Flip it over. I don't speak English. So now it's like, okay, you pass your Spanish test, but can you really speak Spanish? The answer is probably not. At least I couldn't after 2 years of it. So the reason I bring this up is most people in our Western society, we think that we can just memorize candlesticks, and in memorizing them, we understand them. And in reality, what happens is the exact opposite. In memorizing them, we get so narrow in our view that anything that sits outside of that view doesn't lead to a proper interpretation. The real use, the beneficial use of candlesticks is to learn how to interpret what they're saying to you. And that's what I want to talk about today. I'm going to give you 5 steps and 5 key distinctions that will help you interpret candlesticks. I think it's great if you know the titles, if you know the names. But the reality is, I don't care if you know the name. I mean, if you call this a dark cloud cover or if you call this a red candle melting down the mountain, I don't care. The title, the only real use of the title is when you and I are talking together and we're trying to reference it and we need the same nomenclature. That's the only time the title actually matters. What really matters in the real world of trading is that you know how to use it. So what I want to do right now is I want to go into, I called them 5 secrets. And the first secret, each of these, if you'll remember these 5, and get yourself pen and paper, because if you remember these 5, your understanding of candlestick trading will become so much simpler and so much easier. Okay, so here we are. The first secret of candlestick trading is this. It must happen in the right location. So I use location, location, location. If you've ever studied real estate, they always say the 3 most important words in real estate is location, location, and location. And I'm going to say the 3 most important words in candlestick trading is location, location, and location. What do I mean by that? Well, here's what I mean by it. Whenever you learn your candlestick patterns, they're all going to come with it, bring with it a location. And that location is going to be at the top of a swing or at the bottom of a swing. And so when you look at your bullish reversal patterns, you're going to be finding those at the bottom of a swing. You'll have your candlestick formation, such as this little morning star reversal that I'm drawing presently. And you'll have your little pattern. And if you're not careful, you'll just lock it in. Oh, that candlestick formation is a morning star reversal. You are correct. It is a morning star reversal. But it doesn't mean the same if it happens at the top. Let's say it happens at the top of a swing up here, and you have a little bearish candle, followed by a little star, followed by a bullish candle. It's the exact same construction of the candle formation, but it has a completely different meaning. That's why just scanning for candlestick charts or candlestick patterns with some software doesn't always work. This is why AI can get confused with candlestick patterns. For years, people have been trying to scan for candlestick patterns, and they'll come up with them, but oftentimes the location is wrong. Location is the most important thing to recognize about candlesticks. If you want to properly interpret them, you must first recognize the location. Location, location, location. And here's what you need to know about the location. For a bullish reversal, if you're looking for a bullish reversal, such as a Morningstar reversal or a bullish piercing pattern or one white soldier, any of those, it needs to happen after a downswing. You will see your pattern, and then you have the swing in the opposite direction. This is a bullish reversal. It's bullish because it happens after a bearish swing. Okay? In the case of your bearish candlestick patterns, they need to happen after a swing high. And that sets you up for a bearish reversal. Because outside of the context of location, the exact same candle formation will have either no meaning or a completely different meaning. And a story that I often tell, I'll go ahead, I'll take the time to tell it today. A story that I tell about this is it's like a young 20-year-old girl or 19-year-old girl. Let's say she's 19 and she's a sophomore, junior in college, and she's getting her nursing degree. And she signed up to take her nursing clinicals. And let's say she's in New York City. And she kind of messed around and she had to do her clinicals in the evening instead of in the daytime. And so she has to be at the hospital from 3 p.m. to 11 p.m. She gets off at 11, and then she has to walk a few blocks to the subway. So there's your scenario, okay? Well, one night, she gets off a little bit late. It's a little after 11, and the streets are very, very dark. She's about to miss her train, and she decides to cut through a dark alley. And as she's walking through the dark alley, she hears footsteps behind her. What is she thinking? Young 19-year-old girl, we're going to assume she was beautiful, alone in the dark alley streets of New York City, almost midnight. She's thinking, uh-oh, this is not good, right? She probably starts to run a little bit faster, tries to get out of the dark alley, and, you can create your own horror story from there. The scenario created a panic. Now, let's take the exact same 19-year-old girl. It's the summer. She's come home from college. She's back in her nice suburban neighborhood with her parents. It's a gated community. There hasn't been a crime there in 47 years. And she's home. She knows her boyfriend wants to sneak in and see her. So she makes an agreement with him. She says, hey, I'll meet you at the front of the neighborhood, just inside the gate. And she sneaks out. And as she's sitting there under the light post, waiting for her boyfriend, she hears footsteps. And what is she thinking? She's thinking, my lover has come to find me in the middle of the night. Same young girl, same time of day, different scenario, same footprints, different scenario, different story. The same is true for your candlesticks. A candlestick formation that looks like this is called a bullish piercing pattern if it happens after a downswing. But if you're in an upswing and you have the exact same formation, not only is it not called a bullish piercing pattern, it actually means nothing. It has no name and it has no real significant meaning in terms of reversals. In a bearish swing, when you see a bullish piercing pattern, the probability of moving bullish is about 75 to 80%. In a bullish swing, if you see the exact same context, the exact same patterns, I said context, but I meant the same pattern. If you see the exact same pattern in a different context, it may or may not move bullish. It's probably about 50-50, to be honest. It might even be less than that. That's why I say the three most important words in candlestick trading is location, location, location. Some patterns, such as the bullish piercing pattern, would mean nothing out of context. Other patterns, such as this one right here, at the top of an upswing is called a shooting star, and it's very bearish. Ironically, the exact same pattern with small candle body, we call it a spinning top with a long upper shadow, at the end of a downswing is not called a shooting star. It's called an inverted hammer. shooting star after an upswing is extremely bearish. That says bearish even if you can't read it. Inverted hammer after a downswing is slightly bullish. Same candlestick, identical formation, different location, different meaning. 3 most important words in candlestick trading: location, location, location. The second secret I want you to understand about candlestick trading is this. You need to understand the story and the sentiment. Candlesticks are not about just identifying a pattern and running the program. That's a Western view. But if you understand the Japanese view of how they understand and how they understood and interpreted candlestick formations, you realize it had much less to do with the name of a pattern, and it had everything to do with what is the candlestick telling us. For example, we come over here to our chart, and let's take today's candle on the Dow Jones, for example, because I told you it was very appropriate for what we're doing. A Western view would be to look at this and say, oh, it's a green candle, it's higher. Check mark. Oh, look, we're up 668 points. Fantastic, check. Everybody's happy. A Japanese candlestick trader looks at this candle and says they don't care about the color because, number one, the name of that's called a doji. It's the same open and same close, basically. But more importantly, the reason they don't care about it is because of this long upper shadow and this long lower shadow. And in the location, having bounced up, run into our moving averages, all around our support and resistance, in the location, which was secret number 1, a long-legged doji like this, that's a doji candle with a long upper and lower shadow, it does not mean bullishness. What do you think it might mean? If you see a candlestick that looks like this, yeah, okay, it's up 667 points. A lot of people today are buying. That other podcast I told you about that I listened to this morning where I disagreed with his perspective on gold, I also disagree with his perspective on the market. Because he's very narrow in his view. He's like, oh, it's up 700 points. Yeah, it's going higher. And now we're probably going to be trending. He's looking at it from the wrong perspective. You're looking at it from a Western perspective. It's up or down. No, this is indecision. This story right here of this candlestick says extreme indecision. If we end the day like this, I'm going to put a probability that tomorrow we're trading to the downside, because of the location where it happened and the type of candlestick. Say, how's it indecision? Well, here's how. How does this candlestick get created? Remember, the candlestick is formed by the open, high, low, and close. Okay, so if your open is here and your close is here, and at one point we traded way up here, that's your high, and at one point we traded way down here, and there's your low. That means at one point during the day, the candle looked like this, which is true. We all saw it this morning, up 1,000 points. Then the bears came back in and drove it down, and at one point it looked like this, which was also true. So if you got up early this morning and you saw the big bullish candle, you thought, this is incredible. And then about 2 or 3 hours later, if you saw the big red bearish candle with a long upper shadow, you thought, this is terrifying, if you knew your candles. But if we end basically where we began, I'm going to actually tell you that this price over here, the 660 points to the upside, actually doesn't mean anything, relatively speaking. The much bigger story is the candlestick. The narrative of what's evolving in the market as it's portrayed through your candlesticks is one of the greatest gifts you will ever get from your candlesticks. It's why it's one of the 5 disciplines of trade analysis. Because candlesticks tell you a unique story of how the intraday market is performing. It's not just that we're higher or just that we're lower. It's a narrative. It's a sentiment of what's going on. There's all sorts of other candle formations, such as I mentioned the shooting star. Why is this one so bearish after an upswing? The reason this candlestick pattern is so bearish after an upswing is because it's, number one, it was a bullish trend, and it looked so bullish until later in the same session, the bears came back in, pushed back, and we ended up with a long upper shadow, and we flushed all that. All that bullish sentiment from early in the morning got flushed down. Or maybe, in a more extreme scenario, maybe it drove it all the way back down, and we actually ended up with a slightly red candle or a slightly bearish candle. This upper shadow is actually one of the most bearish narratives that you will ever see in the market. But people who don't know how to interpret your candlesticks, you don't see that. Let me show you another example, real world right here. I just noticed it. A lot of people were terrified on this particular trading session. If you can see that candle there. We were in the midst of this massive tariff panic. Everybody's freaking out. And we had this really long leg doji candlestick. It's not quite a doji. It's more of a very, very small candle, about a spinning top, but almost a doji. Long, long lower shadow, long, long upper shadow. That candle showed indecision. An indecision at a turning point. Indecision. Come on. I don't think I spelled it anywhere close to right. Indecision. Indecision at a turning point. You say, was that a turning point? Sure. Turns out it sure was. Look at that. Look where our lines are. Indecision at a turning point very, very often leads to a turn in and of itself. So second secret of candlesticks, number one is location, location, location. Number two, learn to read the story and the sentiment. Learn to read the story or the sentiment. Second secret. Third secret of candlesticks. You ready for this? The third secret goes like this. You've got to learn the difference in the swing and the trend. You got to learn the difference in the swing and the trend. And I studied candlesticks for years, even went and studied under Steve Nissen himself. He was one of my mentors. I took classes with him, got to know him, and he didn't teach me this. It's such a Western ideology to think everything has to do with a trend. It's not true. In candlesticks, you have to identify the difference in a trend and a swing and realize when you see a bullish reversal candle, it's not saying, oh, I'm up here at the top, I've got a reversal candlestick formation. Let's say I had I know I said bullish reversal, but let's say I have an evening star reversal. Now people are like, okay, the trend's reversing. No. Actually, now sometimes it does reverse, but that's the wrong interpretation. If you're looking at a full-on trend, that was my trend line I just drew. If you're looking at a full-on trend to be reversed, you don't want to look for candlesticks. You're looking for chart patterns like the double top that we looked at yesterday, or the triple top, or the head and shoulders. These are terminal chart patterns that will terminate a big picture trend. When we're looking at candlestick patterns, we're looking at the swing high, swing low, swing high, swing low. And what you're going to find are these candlestick formations are occurring right here, right here, right here, right here. You will find these candlestick formations inside the head and shoulders at these turning points. When I understood this, everything changed for me about candles because I had been trying so desperately to formulate candles into a box that the trend is reversing. When I understood it had nothing to do with the trend, it had everything to do with the swing. Wow, it changed everything. So what that means is, in learning to recognize that, let me zoom out a little bit here. Zoom out, there we go. When you look at a trend like what we've had on the Dow Jones Industrial Average, depending on which one you want to draw, let's just draw this one right here. People think, oh, well, right up here at the top, I'm going to get a candlestick formation, and it's going to reverse the trend. No. Candlestick formation had nothing to do with the trend. Candlestick formation is way too refined for that. Where you're going to find these formations, yes, you'll find it at the top, but you'll find it here, and here, and here, and here. This is where you'll find your candle formations. The ones that matter. This is where it helps you. You say, well, how can it help me? I don't want to fine-tune my entries and exits that much. Well, maybe you don't, and that's fine if you don't. But let me show you a scenario where you do. Let's say you're looking to pick up a trend. Let's say you're looking to get into a trade after a pullback, such as this scenario right here. I'm looking to continue a trend. I want to get in. When I get back on top of my moving averages, my averages start crossing. I want to get into the trade. How do I know the trend is now ready to continue? After the reversal here, the pullback, which, by the way, candlestick formation, multiple patterns in there, candlestick formation sending us the other direction, candlestick formations. All of these turns had candlestick formations that mattered. This one up here is basically a one black crow. This one here, well, there's the inverted hammer that I talked about. I'm trying to figure out what we want to call that 2-day formation in there. You're either going to call it a bullish harami, which it's not quite a harami, or you're going to call it, it's definitely not a bullish piercing. I think we go with harami. The one at the top, bearish engulfing, mixed with almost a shooting star, single day candle in there. These down here at the bottom, they're definitely a bullish harami, followed by, you actually have a one white soldier right there as well. All of these were reversal patterns that told us the swing was reversing. All of them. Most people miss that. They're thinking, oh, bearish engulfing, it must be a bear market. Oh, there's our bearish engulfing. We're going to go short the market. We're going to make so much money while it shorts. And then, sure enough, they end up stopping out for a loss. It looked great for 3 or 4 days. It turned against them. And they wonder, why are my trades always on the wrong side? Why are the market makers against me? The market makers aren't against you. You just didn't learn how to interpret the data. But let's look at this one, for example. Okay, so we started to continue the trend. You're looking for a pullback so you can re-enter. We pull back to the moving averages, and in here, what do we get? We have a red going to a green candle. We gapped up and closed above. That is a one white soldier. We have a long lower candlestick shadow. This is called a hammer. It's at your support line. It's at your 20-period moving average. And now we break out. Boom, there's your entry signal. Anticipated by candlestick formations in the right location. Recognizing the story, recognizing the sentiment, recognizing the right location at the end of a swing, not at the end of a trend. Learning this little distinction about candlesticks will change so much of your understanding of the data that you're getting. Okay, so now we come to an actual market top. Did we get candlesticks up here? Absolutely. There's your bearish engulfing. We had several spinning tops and other signals up here that suggested this swing was done, but it didn't tell us the trend was reversing. It just told us that swing was done. Okay, we get back down here. We get a morning star reversal, evening star reversal. We get a couple other patterns in here, bullish piercing pattern. All of this suggested the trade was heading back up. At the top, we got a bunch of spinning tops. We got 2-day patterns in here, all suggesting the trade is going back down. We got one there, we got one there, we got one there. I don't want to name all these right now. Okay, we got all these little suggestions that the trade is rolling over. But it was telling us that the trend or the swing was moving. It wasn't telling us that the trend was reversing. We have to zoom out and see the bigger picture to understand the trend. And of course, when you zoom out and you see the bigger picture, you see multiple things. Number one, you can see there was a double top that was forming that eventually did break and confirm. Number two, we notice that we're below our moving averages and our averages are separating. So we have other technical skills, other tools that tell us the reversal is kicking in. But in terms of the fine-tuning of the swing, our candlesticks were the best tool we had there. Now, where would that be useful for you? Well, one, I just mentioned trend continuation. Another place, what if you're trading this trend and you're very bullish and you start seeing all these reversal candlestick formations at the top? Maybe you're thinking to yourself, oh, I really thought that this thing was going to break out. It was going to hit 50,000. But what about all these candles that are telling us it's trading down? What do? Well, a smart trader would tighten your stops and get ready to get out. I call these early reversals. Early reversal signals is actually what I call them. And they're going to come almost exclusively from your candlesticks. That's why it's useful to learn how to interpret your candlesticks, because you can recognize the end of the swing very, very early, or recognize the beginning. All right, next, secret number 1, location, location, location. Secret number 2, I already forgot secret number 2. What was secret number 2? Let's go back. Story, that's right. Story and the sentiment. Secret number 3 is understanding the swing versus the trend. Secret number 4, learn the power of the shadows. The power of the shadows. And I kind of already hit on this today, but I'm going to hit on it again in more detail. Candlestick shadows, that's the upper and lower portion of the candlestick, is one of the most important part of the candlestick. That shadow tells a story. In this case, it tells a story that the market opened, and at one point it traded all the way up here and we had a big old bullish candle. But by the end of the day, the bears pushed it back down and we ended up with a fairly small spinning top with a long upper shadow. May not mean much to you, but if you don't understand your candlesticks, here's how you're going to interpret it. Like I used to. I used to see a candle like that and think, oh, what a bullish day. Now I don't. If I see a candlestick like that with a long upper shadow, I immediately recognize this long upper shadow is bearish. Even though it's a bullish candle, even though it's a higher close than open, even though we probably put in a new intraday high, that's extremely bearish. And more often than not, when you see a context like that, a day or two later, you start to see the swing turning. Your candlestick shadows are telling you as much or more than the real body of the candle. The open and the close is important. Yeah, it's important. But those candlestick shadows, let me show you on current market data. Right now, I just mentioned this one a week ago. 2 weeks ago, maybe. This long candlestick shadow right here. Remember, we have our support level running through there. Remember, I showed it to you just a minute ago? I'll show you again in case you forgot. Why is it redrawing on me? There we go. Okay, so you see we got our line right in there. And intraday, it sold off to these lines. That's telling us a story. The story of the real body and the long upper and lower shadow is a story of complete indecision and confusion. The story of the lower shadow tells us that the bears are losing steam or losing momentum against the bulls. The bulls are showing up and they're buying at support. That's the story of the lower candle shadow. The story of the upper candle shadow is the bears are still trying to push. And that's why we ended up with this high wave candle with a long upper shadow, long lower shadow, because you have massive indecision. The fact that it occurred in the location of support is incredibly insightful for the next swing of the trade. And sure enough, it was the next day. We did have a bearish candle, but we basically ended very close to the same price, and then the bulls came in with great gusto. This became the bottom. I can show you market turn after market turn where the big turn happened with a long upper or long lower shadow. And I'm talking big market turns. Over and over. The very bottom of the 2008 crisis, after all that September selling, happened with an identical candlestick, just like that. I remember it like it was yesterday. It was 2008. It was October of 2008. The crash had been in September, August and September, and it was October 10th. If you go back to the S&P 500, it was October 10th, 2008. How do I remember that? Because it's my anniversary. And it was a Friday. And I was in St. Thomas, Virgin Islands with my wife on an anniversary trip. And I was sitting there at the pool watching at the little bar. I was watching the panic on Wall Street as we were down more than we'd ever been down. I forget the number. I want to say 800 or 1,000 points at that time. But it was the most we'd ever been in one day. And everybody was in an absolute panic. And by the end of the day, it all came back and we ended up with one of these little spinning tops with a high wave candle, long lower shadow. And I told my wife, I said, you watch, Monday morning the market's going to go up. And sure enough, Monday morning the market went up. It was the very bottom. Well, the bottom of that one. There was one more swing that came in December, January. But the bottom of the biggest crisis happened with a candlestick that looked just like that. Okay? So, learn the power of the shadows. And then last but not least, I want to give you the secret to interpreting the patterns, and that is alternating colors. Alternating colors. Yes, there's a lot of different candle patterns. There's a lot of them. And yes, it's nice to do the flashcards and to memorize them, but I'm going to make it really easy for you. Just remember this. After a bullish swing, look for a bullish candle followed by some variation of a bearish candle. And those two together created a pattern. You say, what's the pattern? It actually doesn't matter. Recognize the alternating colors. In this case, it's tweezer top. That's the name of the pattern. But it doesn't really matter if it was a tweezer top or if it was a bearish harami or if it was a one black crow, or if it was a dark cloud cover. It actually doesn't matter. You know, yeah, they all have different names. They all have different meanings, slightly. Some are a little bit stronger than others. The bearish harami is not as good of a pattern as a one black crow. The one black crow is an extremely bearish candle formation. Extremely bearish. You see that sucker, you run. The dark cloud cover is very, very strong candle formation. Tweezer top, very good candle formation. But it doesn't matter if you know the names or not. What matters is you recognize the alternating colors. Every one of these has a pattern within the pattern, and that is it went bullish candle to bearish candle, bullish candle to bearish candle. And when you see that, learn it. Even if you don't have a name for it, learn it. In the case of a bearish swing, it's the opposite. In the case of a bearish swing, it's a bearish candle immediately followed by a bullish candle. And it's going to have a name. Doesn't matter if you know the name. Could be a bearish candle followed by a small bullish spinning top. Bullish harami. It could be a small bearish candle followed by a large bullish candle. That's called a bullish engulfing. Again, the names actually kind of don't matter. It's useful for us to talk. It's useful for nomenclature. But in terms of the actual interpretation, all you need to recognize is I've got an alternating colors. And if you recognize the right location and you recognize the alternating colors and you understand you're in the context of a swing, not in the context of a trend, and you keep all these things in mind, you can interpret your candlesticks just like that. Now watch, we're going to put it into practice. There we go. That's what I was trying to click. I'm going to zoom in here so you can see this. How many of you, after today's lesson, understand this is the end of a swing? And what do we have? We have a big bearish candle followed by a small bullish candle at the end of the swing. You actually don't have to know the name, do you, to recognize that, oh, that's a shift in sentiment. And literally 2 days later, we have another bearish candle followed by a huge bullish candle, shift in sentiment. And sure enough, the swing did turn. What do we have right here? Bearish candle followed by a bullish candle that gapped up and closed above it. Now, I know that's called a one white soldier. You don't have to know that. It doesn't matter. What matters is the sentiment. Now, because we have other downward pressures, the sentiment is losing steam. We've got a pivot point here. We have the moving averages. And today's candle is kind of negating a lot of what we're seeing, what we would have interpreted from that. But you can see it. Let's come back up into this sequence of events up here. Notice the sequence of events. After an upward swing, bullish candle followed by a bearish candle. The swing turned down. At the bottom, what do we have? Long lower shadow. It's the bottom candle. Several green candles as we work our way up. These little small candles are called spinning tops. They don't mean a whole lot in this context. There's the one that matters. It's called a bearish engulfing. It's a small green candle followed by a large red candle that fully engulfed the previous day's candle. Alternating colors. You got it? Oh, that put in the peak. You get all the way down here to the bottom. Boom, there it is again. Alternating colors. That puts in the peak. That puts in the peak there. Alternating colors. Puts in the bottom right here. Alternating colors. We started to put in the peak up here. Took a while to play out, but it did play out. Alternating colors at the bottom. You see how, number one, do you notice how all of them have alternating colors? Do you notice how every one of them is at the end of a swing, not just a trend? And can you start to piece together why these little details would change the way that you understand and appreciate and can trade with your candlesticks? These 5 secrets: location, location, location. Recognize that it's a swing, not a trend. Alternating colors. Story and sentiment. Power of the shadows. I think I said them out of order, but you got them all. Okay? These 5 keys are actually the interpretation keys of candlesticks. Yes, recognizing the names is great. Recognizing the patterns, great. But if you will learn to interpret them, greater. It'll make you a better trader. It'll give you an insight, it'll give you an edge into understanding how things are playing out. Now, if you're a crypto trader, same thing, same principles apply to you. Same candlesticks, everything. In fact, let's look at one real fast right here. I know we need to get going because we've gone pretty long here. But just looking in here at Bitcoin, what do you notice? Exact same patterns. What did we see at the bottom most recently? Bearish candle followed by long lower shadow green candle. Same color alternations. We make the turn. Look at the tops up here. Long upper shadows at the very peak. The intraday high of Bitcoin happened on a long upper shadow. 108. The all-time high happened with a long upper shadow. And that started this huge topping formation that was basically a bunch of alternating candles as the traders were consolidating, trying to figure out what was going to happen next. Go to the previous high, if you can see it in here. Same thing. It's a bullish candle. It was a shooting star candle followed by a large red candle. Together creates a 3-day pattern called an evening star reversal, the very, very peak. Could we have known? Was there any way to know that Bitcoin was going to peak here? Well, it was a pretty good idea. Number one, we had targets up there, but moreover, we had candlesticks that were warning us the very moment it was happening. Questions? Comments? Opposing views? If you have opposing views, rewatch it. Try it again because you can't really argue with what I gave you. I gave you the keys to interpreting candlestick patterns and candlestick trading as a whole. If you haven't liked and subscribed to the channel, please do so right now. Follow over on Rumble. Leave me a comment if you've got a comment. Leave me a question if you want to. Send me an email if you need to. Help at trademaestro.com. Help at trademaestro.com. I'll be happy to try to give you as much insight and help as I can. And we'll be back tomorrow with another session. We'll do one on Friday. And then I think we're going to take next week off as we get ready for the new format that we're going to do starting the first week of May, which we're going to call Wall Street Secrets Live. So we'll talk more about that tomorrow and Friday. But for today, this is all I've got for you. If you got any questions, again, let me know. And I wish you the best. Hope you have a wonderful afternoon. Happy trading to all of you. We'll talk to you soon.